Good afternoon, everyone. Welcome back. Hi, Patrick.
Welcome, everyone. Welcome, Fabio. Welcome, community. Welcome, team. Nice to see you.
Yeah, it's October 9. There's a lot of things going on. We are obviously based in the US. We are in Florida, so we are waiting for the hurricane, but right now things are good. We also had some events, FOMC meetings today right here. But today we're going to focus on gold and crude oil and look at some of the data points to give you an idea on how you can analyze this market by looking at macro, but also by looking at, in particular, futures options. Before we start, let's always go into our disclaimer just for a very brief moment, and let us know if you can hear us, if you can see our screen. Post it in the comment, and any question you have, feel free to reach out in the comment in the section. But let's go with the disclaimer for a few seconds. All right. So what we're going to talk about today is primarily crude oil and gold, and we're going to do that by looking at the data coming from the futures options market and also coming from our systematic models, so CTAs and other systematic fund model to understand what's going on there. So first of all, if you look at our site and you look at products, we have now gamma levels on futures options, and we cover a wide variety of assets from energy to metals to rate to forex, soft commodities, and so on. So the data that you're going to see today is actually coming from the option chain of futures, and in particular, we're going to look at crude oil and gold. But if we look first at the price, so what we've seen from a macro standpoint, over the past few days and few weeks, we've seen an increase in the price of crude oil, breaching the $80 kind of like level right here. We've seen like a small retracement over the past couple of days, and now we're still kind of like going towards that 80.79 level. So if we look at what's happening in the crude oil space, mostly is due by the macroeconomic events, obviously the supply chain risk and what is happening in the Middle East. This is really driving the price. We've seen from in the past like a surge in call option activity and a significant increase in out-of-the-money call options, especially on WTI and Brent futures, and mostly has been driven by the macro environment, by the news, and by the volatility in the market. So obviously, why do traders look at out-of-the-money call options? So first is really the volatility factor. So they are placing directional bets, but they're also placing volatility bets. So always think that the key factor in the option pricing is obviously the underlying price, the volatility, and time, right? So obviously, time to expiration is important because if you have out-of-the-money options, then theta has a bigger effect if the price doesn't reach that strike by the expiration. But also volatility is very important. So traders are using out-of-the-money options because they are cheaper, and they are betting on the increase or decrease in volatility, so the change in volatility. By using out-of-the-money option, they are paying less premium, and they potentially could benefit not only if the price of the underlying goes to the direction of the strike, but also if the volatility shifts and obviously the time to expiration. So obviously they are betting on that. So how can we see that? So if we go back into our bot, first of all, we can look at, let's start with the December contract on crude oil. We can look at the volatility and open interest, and we can kind of go back in time and see basically, we see a lot of like, as you can see, a lot of green here. So most of like the open interest is kind of like on the call side. Here we see also the volume on the right-hand side, and we can go back in time up to 5 days to analyze, how this has changed. So here we see, for example, that we had more like red bars towards that lower part. And if we go back to the futures date, we see that, obviously there's a shift there. The second thing we want to do is we want to look at gamma, right? So we can use our net gamma exposure chart, and we can look at CL. We open the December contract, and we can see basically the gamma exposure here. So here we see that we have our core resistance is at the 80 level. We also have a big really level here, 75, 74. Our high vol level is at 70. Here you see the positive net gamma exposure, and we have our put support here all the way down at 65. We can also go back in time and see how things have changed. If you see, can you spot more like green bars, more red bars as the positive or negative jacks change over time. And then we can also do the same thing with our multi-expiration. So we can look at different expirations in the chain, and we can see kind of like if the picture is similar, even if we go at different expiration in the future. So monitoring this is very important. Then what we can do is we can look at also what is happening. So we've seen a big flow coming in from the algorithmic trading funds, in particular the CTAs that have been adding long positions, boosting kind of like the price. So we saw, for example, a big surge in kind of like the Brent crude oil above the $80 due obviously to the macroeconomic events. And a lot of that has been driven by CTAs. For those who don't know what CTAs, there are systematic strategies that are using like, technical indicators and, price action to kind of like determine their strategy. So what we do have here is we have our CTAs model, and we can look at different assets. We can look at gold, we can look at treasury. Let's look at Brent right now. So if we look at our Brent oil here, we can see that the green, so the white line is the price of Brent, and the green line is kind of like the positioning of CTAs. And obviously this kind of spike in positioning has also contributed to the increase in price. So here we see how that has changed over time. So all of these models can be found right here, and we also do the same for WTI right here, similar picture. We can look at that, and we can also show you gold and silver in a second. I'm going to pause it there. Please let us know if there's any questions, and then we're going to go into the chart, look at some levels, and then Patrick, maybe I'm going to switch it off to you to understand, okay, as a future trader, how would you capitalize on this information, and how would you apply your kind of like roadmap there?
Yeah, but I have also some question if we don't get a question, because I think it's really important to understand this. So you was giving us the point about volatility, how important volatility is for the puts and for the calls. So what is this meaning if volatility increase? What impact have this, and what impact have this if volatility decrease? Can you give us some idea about this for the people who may be futures trader but have no idea about options?
Yeah, so from an option standpoint, obviously, everybody thinks about option as a leverage instrument. So if you think that the price of the underlying goes up, you buy a call option and you're making money because the stock price or the future price will move. But in reality, the underlying price is one of the variables that go into the option, kind of like pricing and option premium calculation. You also have volatility, which is very key, and you also have time, right? So time to expiration. So really, if you're buying out of the money options, let's say that you're buying an 80 strike or an 85. So in this case, we've seen if we go back to our bot, we've seen that our core resistance is here at the 80 level for this contract, right? So a lot of like the bets now are being placed that the price will go from where we are here, 73, all the way to 80. And again, those bets not necessarily will mean that the price will get there, but they are a way of the market to position themselves on potentially changing price, but also potentially change volatility. So for example, if the market bought this call option when the volatility was lower, even if the price doesn't go all the way up to here, but the volatility increases because of the macroeconomic event, then you can still benefit from the increase in the premium. So you're still making money even if the price kind of hasn't reached this level here. So a lot of the traders, especially the commodities traders, are betting on changing volatility more than changing price, right? Changing price is obviously very important, but also you could benefit from changing volatility. For example, if you are selling options when the volatility is very high, a change in volatility to the downside, even if the price doesn't move, will have an impact on the premium. So you'll be basically in this case making money because the volatility goes down and your premium decreases. So you are basically receiving that premium. So from a future standpoint, obviously, how can you use this chart? So obviously, the more the price goes towards this core resistance level, and the more those out of the money options are becoming now kind of like at the money or in the money. So therefore, you could expect a bigger reaction around this level. So it's always good to monitor that. But also not only that level, also the other like kind of gamma level here. So it's important to know, even if you don't trade options, like really these areas right here, and then we're going to go into the chart, can become market reaction zones and can be relevant if you are a futures trader. And if we go into our, in this case, crude oil contract, let's look, in this case, we have CLX. If we look at the levels, so this would be basically, for those who don't know us, you can actually now integrate your levels directly into TradingView. So I could actually go here and request my CL level. I copy this text. I come back to TradingView. I add it to the chart. I have it here. I already pasted it here in here. And now the level appear. So as you can see, we have our, and I was looking at a different contract actually, sorry. So we have our core resistance right here. And then we saw like a big move on this kind of like JAX level, or almost at the 1-day minimum. We saw a big upside move towards this level. So now we are kind of like in this range between this JAX 6 level and this core resistance.
And then we come also into the part how you can use the levels. So everyone who knows me, so my mainly focus is on NQ. So normally I will say to you, my setup is the high wall levels, high wall 0 DTE, or the high wall, and then with strong momentum targeting the 1-day max or the 1-day min. But what we can see also on the crude oil on gold, where we be later, is looking to the left side and understand the story from the levels. So now we have the call resistance 0 DTE and the gamma was 0 DTE there. So what was happened? So we getting the down move yesterday, and then we getting the reaction on the call resistance. As we was saying, it was in support and resistance, depend on your strategy, where you're looking for. And we see clearly there was some reaction. And if we come back to this level, we want to see how strong is the momentum, the volume. We can use the many other indicators. We can using in real-time data, whatever you want. But we will see and measure the momentum. And if the momentum is strong, we will see, can we go and prove this, or did we seeing a reaction? And based on your bias, if you're more bearish or if you're more bullish, then you can take advantage of this. And we should wait until we came to some levels. The next level, who was also really good in the play, is also a major level. It's put support 0 DTE. And if we're looking to the left side from yesterday, we were seeing again on the put support 0 DTE, there was a reaction. And now we have the same reaction today also on the put support. And what I'm doing as a futures trader, if I have not so much clue about option, how everything works, but I know exactly the price action based on the levels, because I'm looking to the left, I'm connecting the dots. And this is one of the big major thing what I was learning when I was coming to MenthorQ. I remember first I have to observing the levels. So when we were seeing price action, what levels was really relevant? We have the academy, we're giving every information about this, but to read something and to observe something is a quite bit difference. And then I was looking into it and the price action when the levels was showing up, and was thinking about how I can personally implementate the levels into my trading strategy, what will fit my interest. And then I came back with the high wall and the 1-day min, as I said before. But for the crude oil and for gold, I would say look always to the left side and see how the levels was working. Put support, call resistance, perfect. And then see if this your A plus setup is meeting also, and then take advantage of this.
Mm-hmm. Yeah, thank you, Patrick. Yeah, absolutely. And then we can look at, if we go back to, and then feel free, guys, to send any questions in the meantime. But if we go back to our gold, so we're going to look at the December contract. All right, so we have the levels right here. So from a technical standpoint, obviously gold has reached all-time high, is still in a very strong upside momentum, but we saw kind of like in the last few days, kind of like a downtrend starting, mostly due to obviously the dollar impact. So the impact of the dollar, the impact of the decision on the rates. So that's going to have an impact on gold. And then always gold is obviously a safe haven asset. So obviously what's been happening at the macroeconomic level has been having an impact on gold as well. So here we have our levels coming from gold. And as we can see, we are pinning again as a reaction zone right here. So the price is kind of like pinned at this core resistance level. So we can do the same kind of exercise. So if we go back to our bot and we look at our NetJacks chart and we look at our December contract on gold, we see obviously a strong positioning on this area here. This is our core resistance, 2,550 level, but we also have larger area more like to the upside, 2,700. And then we kind of have our put support right here. So you see that obviously a lot of white green bars, not many kind of like white red bars. We can also go back in the past and see how this has changed. So we see like very kind of like focus positioning on calls, mostly to the upside right here. And go back a couple of days, still same picture. We also want to monitor if the multi-expiration is giving us the same picture. So for example, right here today, and this is the expiration for today, we had a lot of like kind of like negative positioning here. So we had a lot of like our core resistance was at 2,625. This was kind of a situation on the 0 DT levels. This is the situation for tomorrow's expiration. So 1010. And then here, if we look at the November 25th, we see kind of like more on the call side. And if we look at the monthly on October, the 28th of October, we also see this picture here. So very important to monitor that. And then also similar to what you can do with Brent and WTI, we can also go into our gold right here. Let me see if I can find it. This is our CTA positioning. So as we can see, we had a sell-off right here, and then we kind of now are back to kind of like a positive positioning of CTAs on gold as well.
Yeah, and then also you was saying something really good, Fabio, in the beginning, and let me repeat this. So if you're looking to our NetJacks, to the daily or to the multi-expiry, as a futures trader, if we're looking into this, so we must not understand how the NetJacks and everything is working at the moment. So I will not overwhelming you, but what you should be understand is that the big bars, so what you see on the chart, they're acting most of the time as a magnet. And this is something what you should be have in the mind. So if I should be explain you the gamma exposure chart and NetJacks, I would say look for the big ones and think about this is a magnet. And most of the time we coming into this area because it's a magnet. And if we have a strong momentum to the upside, look where's the magnet on the upside. If you have strong momentum to the downside, look where are the magnets to the downside. And then you have a good idea where you can place your targets. And this is something really important. What I was learning, I'm not an options trader. I'm a futures trader. But this was something what I was learning. I was not looking like, okay, what is all the theory behind everything in the options market? I think this needs so much time. But I'm a trader. I'm not an analyst. But I want to understand the simple way. And I was understanding, all right, the big clusters are the magnets. And that's something what Fabio was saying. I will repeat this because this is so important to understand.
Yeah, absolutely. And again, it goes back to, obviously, if you guys want to learn more, we have a series of guides within our website that would explain everything we're talking about today. So we have our net gamma exposure chart here. We have our gamma levels. So there's documentation on any of the things that we're talking today, but essentially that's correct. So those bars are market reaction zones that tend to be very well respected because of the way the option mechanics work. And therefore, you can actually then now plot them into your charts. So all these wider green bar or red bar, they would be our JAX levels. So JAX 1, JAX 2, JAX 3. And they are plotted here. So if we go back to our crude oil example, we see that there is a strong reaction right here. We see that there is a strong rejection right here, this pinning effect right here. And obviously, as we mentioned, the core resistance, gamma wall, become very, very relevant. And then we can do obviously the same, switching back to kind of like your NQ, similar thing. We have the same levels right here. Those would be your reaction zones for the NASDAQ in this case. Then before we answer, so please paste the question. I saw your question, Aaron. We'll get back to that. Before we get into that, into the questions, another way that you can use our data is by looking at more like longer term positions. So if you want to look at like swing trading, not just like real day trading, the levels intraday. If you're a futures trader, then it's great. But like if you are more like in the macro side and you want to like understand, okay, what is the trend in this asset or in this like asset class? We also have swing trading levels available, and we can only look, for example, at our swing models, and we can look at our 5 days prediction and our 20 days prediction. And in this case, we don't do it on futures yet, but we do it on any asset. So all the ETFs, all the stocks, all the indices. So we could do it on USO in this case. We can also do it on the ETFs, the energy ETFs, right? So what you see here is now I'm basically using the USO ETF, and I'm looking at our swing levels. We have a lower band, we have a green section, so there's a kind of like a bullish bias on this asset. We have a risk trigger at 81, and if we also look at the same picture here, we have our lower band for XLE at 87, and our risk trigger is at 94, right? Then what we can do is we can go and take those levels. Sorry, we go and take those levels and we plot them into the chart. And then what we do, once the levels are there, we can actually convert them from USO to basically our crude oil in this case, or yes, we go back to CLX. And then now we go back to our crude oil chart. And now if we want to add our gamma levels, now we have our swing levels for USO over the past 5 days. You see the date here. You see LB stands for lower band, RT stands for risk trigger. We have more documentation if you guys are interested, but then you have your kind of like swing level plotted right here. And, you know, I'm going to turn it back to you, Patrick. How would you use those if you were obviously as a future trader? How would you use those levels, and how do you use them right now when you trade, for example, NQ or other assets?
Yeah. So if I would be a swing trader, I will look also in the reaction. So it's the same story what we have with the gamma levels. Looking to the left side, we have to find out the story behind the levels. So if you're looking to the lower band 10.07, so what we can see is also that we're getting the reaction there. So I want to see if we getting also the pump there, the reaction to the upside, if this will be holding, that we see the technical correction from the risk trigger to the lower band 10.07. So this would be for me my play. So I will look now as a swing trader if I see here the bottom, if this is now my resistance or my support, depend on your direction, and then targeting back to the risk trigger what you was mapping out. So basically looking to the left side, look why we have there the levels, and then also as a swing trader, it's highly recommend looking into the multi-exploration gaps, because we was learning before the levels acting most of the time as a magnet. Depend on the trend, if we're going down or if we're going up. And if we look our swing trader, the options matrix is also really highly recommend for you. Go into the options matrix, look into the bigger picture, and depend on your trading time frame, looking to the expiration date. So if your swing trading position is most of the time for 1 week, 2 weeks, 3 weeks, look to the expiration dates, and then look how the expiration dates would be changed in the gamma and the DAX. Understand the difference between negative GAX, positive gamma, and all this stuff. So this will be very, very helpful for you. And we have also the expecting move. So how big we can move in this case. So this is really important. And I will say to you, this is the way how you should go.
Mm-hmm. Thank you. All right. To answer one of your questions, Aaron, how do you get gamma wall? So the gamma wall will be in your TradingView inputs, not directly on the chart, but then you will get it when you load up your levels on TradingView.
And you was asking about the possible target. So first things first, I'm not a financial advisor, so this is only my personal opinion. So I cannot tell you what could be the possible target. But I can say you, if I would be trading crude oil, so I would looking now if now the lower band 10.07 is now holding as support, and if we can go long, and then I would look very, very closely into the rumors in the Middle East conflict. What's going on? Is there some event happened in the near future what can possibly affect my position as a swing trader? Or is something other things happen what also should I be know? So news on crude oil is really, really important at the moment. And then I will make a decision based on my risk management. Is the risk for myself, especially as a futures trader, is the risk really good for me? Or is this because of the volatility, what can happen in the market on the crude oil? Is this a way too high? Then I will possibly switch to the ETF, because this is much safer. We have not so much leverage on the USO ETF. So this is something what I would doing, maybe looking into the USO, looking also in the levels, in the swing trading levels, what we have. We have here also the levels. So we have the lower band also there. So we was seeing the reaction. And then we was speaking about this in the online course, what we was recording for you and what we was doing in the community. We was speaking about timing. We was speaking about the setup, and we was speaking about the location. Ask yourself, is this not the right time to go into the market? Yes or no? depend on what you're looking for. Is this now the right setup? Is this something what I really like? And this is also the good location where we are. So if you can answer everything with yes, then let's go. And again, I cannot give any advice what I should be looking for, because I'm not a swing trader. I'm a day trader, but I'm also an investor. And as an investor, I'm invest long time. And this would be something where I'll be looking for.
All right. Okay. Any more questions, guys?
Oh yeah, let me add something, Aaron. When we speak about swing trading, when we're speaking about the possible targets, also if you will bet on that the crude oil goes higher, maybe think about also to hedge positions. Also as a swing trader, how you can use options to hedge your positions in the futures to protect your maximum drawdown. So this is something where I would be also looking into it. Yeah.
Yeah. All right. Thank you, Patrick. More questions, please send them in the comment. In the meantime, if you guys want to kind of join us, join our mailing list, we actually had a really good newsletter coming out 2 days ago on crude oil. So if you want to make sure you receive all of that, please create an account right here. You also can get access to our free academy, our guides. So once you create an account, you will have access to all this section. You have our guides here and our academy, and you'll be able to access all the free courses right here. There's a lot of them. There's one on swing models. There's one on trading with MenthorQ. There's getting started, how to use our models, our gamma levels. There's a lot of information that is available for you. Just create an account. And then if you want to join our plan, our membership, you can also create a trial and try it out and see how the data works for you, how the levels are playing out. You can integrate those into TradingView. We also have Ninja Trader if you're a futures trader, Sierra Chart, and we're going to come up with more integration in the next few months. And if you have also any questions, please send us an email, reach out to us via Discord, send us an email. We are there for you guys. So please don't hesitate to contact us. Tomorrow, Patrick, we have another event. So if you go under our live, we're going to talk about earnings. The new earnings season is coming out. So we're going to look at some swing models, some data points on maybe financial sector. I think is the first one that normally comes out in the earnings season. And then we're going to look at more data, and any question you can always ask tomorrow as well. And also we're going to have a product demo tomorrow morning for our free and premium members. So please join us.
Maybe you can go now really quick in the Discord from us in the free space so that the people can see what we're posting there. So there you have the live sessions, but in the free chat, we have the MQ Insights where we post something. I was posting also about my setup. Someone was asking about crude oil levels. I was giving also something about this. This was, by the way, where I was using the blind spots and the swing trading levels. Was also fitting. We was not speaking about the blind spots, but we have different events where we was talking also about the blind spots. We can help you. And if you be in the free chat, if you have any questions, if you want that we're taking a look into some ticker or some future contract, we will do this. But fair use. So if you have 1 week some question about NQ, okay, let's ask, and we will do this for you. But again, fair use as usual. And yeah, so we are always here to help you, to support you. And I'm more than happy to see you in the free space from us, and much more happy to if you sign up, take the 7-day trial, test MenthorQ, take time and look into this, what we was offering you. And then, become a member and be on our side.
Thank you, Patrick. All right, guys. Thank you very much for your time. Again, any question, send it to us. and then we see you in the chat, and we see you guys again tomorrow for a live tomorrow afternoon at 4 p.m.
Yeah. So have a
Bye.
good day, my friends.
Bye
Bye-bye.
bye.